Hey guys, TommyBryson here, and the stock market is down and things don't look that great. You have Russia, you have Ukraine, and you have basically my money, your money. Most likely, you're losing money right now. And the big question is, should you stop investing? Should you keep going? And I want to start this video with a little story that seems unrelated, but it really does add sense to this whole situation right here. So, about a year ago, I came to Puerto Rico with my girlfriend and we went on this whole little trip, okay? And went to the rainforest. It's called Yunque here. And there was like a group of us, like around like 20 folks, okay? A lot of people came with their couple, their girlfriend, their spouse, whatever it was. And at some point during the entire trip, the entire hike, there was a cliff. And this cliff was around 30 to 40 feet. Now, mind you, I have never jumped from a cliff in my entire life. I had zero plans to jump until everyone was looking at me because basically I stayed down with all the girls while all the guys climbed up and my girlfriend asked me, "Hey, are you gonna jump?" And I was like, "Of course I'm gonna jump. Like, I just want to see how they're gonna get up there. And yeah, I realized why us men tend to die a lot earlier than women do. Like, honestly, okay? So when I go up there, the guy tells me just three things. He tells me, "Tommy, there are only three instructions. When you go up to the edge of the cliff, don't look down, don't think about it. When you jump down, keep your body straight so you land straight. And when you basically land in the water, don't worry, the life jacket is going to bring you right back up, so no need to struggle." And as soon as I moved next to that cliff, I forgot everything he told me, okay? I was there. I was patronized. I was scared. I was going crazy. And I was thinking about it a lot. And when I finally jump after a few minutes of encouragement, like, "Hey, jump, it's okay." And I'm like, "I'm gonna die. It's not okay." I finally jump. I jump incorrectly, so I landed on my butt. Not a good story there. But everything was fine, and I was basically glad I actually did it. But my point to this very long story is that the same thing applies to the stock market. We have very simple rules to make sure that no one gets burnt if you follow them correctly. But if you don't follow them, obviously, you're not going to end up correctly. But even as you do things the right way, it doesn't take away from the fact that it's still very scary. Like, it's scary to jump off a cliff. It's scary to invest in the stock market while you see all your money basically evaporate. Like, that stuff is scary. And when it comes to the stock market, there are basically three instructions, okay? The first one is pick diversified, boring investments like index funds and ETFs. Second one is allow compound interest to do its work. And the third one is just be patient. That's all it takes. And in the end, it will all work out. It will all basically be good. You'll have money. Everything's going to be just fine. And we have history to show us all of those things. But one thing is knowing what to do. One thing is having a plan. And just like Mike Tyson used to say, you can have a plan. Everyone does until they get punched in the face. Okay, so in this video, I'm going to give you my exact plan. Doesn't make things easier, honestly, but this plan is gonna work for you. All you need to do is be patient, let compound interest do its thing, and understand what you're really going to be doing. In this video, I'm gonna break everything down. Just like you, Russia, potential problems going on, Ukraine, stock market crashing, the money is like evaporating in a sense, right? Like, where's my money now? Everything is gonna be just fine. I have a lot of trust in the markets because the market shows us exactly what happens during these times if you look back in history. Doesn't make it easier, but it makes sense to have a plan in place so when it does happen, you know exactly what to do. As always, like this video and top out. Also, if you're new here, subscribe to the channel and hit the bell so you're notified. Now, the very first thing is, Tommy, should I keep investing, or Tommy, should I stop investing? The answer is yes, yes, and no, no. And that sounds crazy, but it does make sense. Think about it, okay? We're all different investors. We all have different goals in mind, so the answer is going to be different. Some people need to keep investing, while some people need to stop investing right now, and I'll tell you which people those actually are. But just as a little fun example here, If you had invested $1,000 back in 1929 to today, 2022 basically, and you had also invested $100 every single month since then, you would have a total of around $76,365,160. Now, obviously, you can't go back in the past to invest that money, but my whole thing is you are right now in the present to be able to invest that money. So then 30, 40, 60 years on the line, when I do say this again, you say, hey, I actually did that. And it actually makes sense. The best place to be is in the present, okay? Just like this runner guy, I forgot what his name is. He says the perfect time, the best time to plant a tree is right now. Right now is the perfect time. And since then, guys, okay, we've had, for example, the Great Depression, 1929, where we had basically a 25-year wait for the market to actually recover. We had World War II, we had the dot-com bubble, we had 9/11, we had the real estate market crash of 2008, and we also had the pandemic of 2020. I can't guarantee you've been through all this stuff. Like, I haven't been because I wasn't born or alive back then. Neither were my parents. But I have been through the market crash, 9/11, dot-com bubble, and also, for example, even the pandemic. I saw all these things happen, and guess what? You still would have had a bunch of money because as time passes, markets, they go down, they recover. You know, it's just how the game basically works. So if this is true, Tommy, and markets do recover, it means that I should not stop investing. The answer is no. Let me stop you there. Because sometimes people have no business investing before they actually start investing. For example, three things here. If you have no sense of your budget, meaning you have a ridiculous budget, you don't know what you're doing with your money, the money comes in, it goes away, you need to have your budget in place first before you stop investing, and I will pause all my investments until I get this in place. Second, if you have a bunch of debts, I have my car note over here, Tommy, my student loan debt over here, Tommy, my credit card debt, my personal loan debt, and all these people are charging me outrageous interest rates, okay? Everything except the mortgage, you need to pay this stuff off before you continue investing, because this stuff is like being in a treadmill. Although it seems like you're making progress, you're not really going anywhere. Same thing here, because as you make money, you're basically spending money because of all the interest is costing you. So you want to pay off the debt first. The third thing is, if you are operating from a sense of no foundation, meaning, hey, I invest, but I don't have, for example, an emergency account, it's a terrible idea. It sucks. It's not a good idea. Because when things go wrong, and they will, you want to make sure you have money on the side to handle the emergencies in life. Now, you might have 3 months, you might have 6 months, but maybe you might want to pause your investments and go from 3 months to 6 months, or go from 6 months to 12 months. And these times right here, when it comes to Russia, Ukraine, what's going to happen? I don't know. Oh my gosh, what's going to happen? The answer is, it tells you that you need to be responsible for yourself. So the more money you have in emergency accounts, you don't need 2 years or 5 years, obviously, but 12 months would be like the cap I would put on it. Like, if you have that much money in there, it tells you, hey, I have enough here to at least outlast this entire thing as long as it might go, until I can basically find another job, okay? That's what I would basically do. So right now, I have a 6-month emergency fund, and I'm fine with that, all right? Now, so if that's why I shouldn't invest, if I'm there, well, what would make me actually be able to keep investing? The answer is the opposite of all that stuff. So you have a budget, you follow it, you have no debt except the mortgage, and that's awesome. And you also have a fully funded emergency account to your liking. 3 months, 6 months, or 12 months. For me, 6 months is enough, but I always add something extra every month to build up to that 12-month one eventually. But to me, 6 months is going to be just fine. And that is the idea. If you are there, it's okay to keep investing, because remember, during times of massive hysteria, when people are not sure of themselves, when people are basically selling left and right, when the markets are basically down, when we don't basically feel super confident, that's the time where you want to take advantage and keep investing. These are the pivotal moments in history that tell you, hey, you could have bought at a very low point, but you didn't because you were scared. Tommy, you could have jumped from that cliff, but instead you had to walk back down to the whole like walk of shame and explain to your girlfriend and everyone else, I didn't jump because, you know what I mean? Like, not to say anything crazy, but sometimes you have to take that step to be able to have the rewards in the end. That's the idea there. Now, I don't want to leave you just with motivation. I want to tell you exactly what I'm personally doing with my money because that matters. So, the first things first, just like you guys, when I wake up and I check the apps and I'm like, the markets are down, my investments are down, it kind of worries me a little bit. Not as much as it used to because I know what I'm doing, but it does give me that tickle that says, oh my gosh, I'm losing money here, you know. But as long as you're doing things correctly, you're going to be just fine. And the one thing, again, is to know what to do. And a different, completely different beast is to actually do what is required when every muscle membrane in your body is telling you, no, let's just get out, get off the roller coaster, get off, you know. Now, history shows you got to keep riding this bad dog until the very end because that's when you're actually going to have all of the rewards. So basically, all the wealth, okay? So for me personally, again, all I do is this. I use an app called M1 Finance. I'm not sponsored. This is not a sponsor to buy them, but I use them. And I use them this way, okay, guys? I pick very boring investments. In my case, ETFs with them. I also have, for example, index funds with Vanguard. And if you want to copy my exact portfolio, which is basically spread between America, internationally, into the real estate market, into the small cap market, into the emerging markets out there, I'm basically spread in a way where if one thing goes wrong, I'm going to be just fine because the whole world is not just America, if that makes sense. So if America is down, internationally, we might be fine. If the markets are down overall, well, the real estate market might not be affected. So that gives me a lot of confidence, and that's why I invest that way. So again, if you want to copy the exact same way I invest, I have a link down below to Finance. When you click it, it shows you exactly what I invest into. But more than that, here's a picture of my investment allocation, and here's a picture of my actual investments if you're actually interested also. Now, the same thing I do is, I understand that when I wake up, and if I see the market down, it worries me a little bit. So I don't want to worry about that. So what did I do? I automated everything with M1 Finance. So every week, usually on Mondays, I think, it takes the amount of money that it's supposed to and it invests it automatically. For me, I only invest 20% of my income, which leaves me with another 80%. And I talk about this in my course, which is, the link is down below. And I do have a $100 coupon. If you want to use it, get it right now. The link is down below. But the idea is this way. I know what I'm investing into. I'm doing it automatically. And lastly, I just let compound interest do its thing. And I allow it to do its thing, and I don't interrupt it. So although I might be going a little, oh my gosh, you know, I just keep doing exactly what works because I know it's going to work. Now, a question I get a lot, and I know I'm going to get here is, Tommy, but what if you do see an opportunity and the market is down? Do you ever want to invest more? The answer is yes. I did that last 2 years ago, kind of crazy, 2020 pandemic, and I invested a little bit over $20,000 at basically the bottom, and I made a good amount of money. Like, I made a good amount of money, but I didn't sell because, again, it's all about the long-term game. I let compound interest do its thing. So right now, the market is down. I could go ahead and invest a lot more money, but again, I've limited myself to only 20% because this way I can diversify myself, not just in the stock market, but eventually get into more into the real estate market and so on. And by the way, in the course, I talk about the financial freedom steps, and I talk about how basically when you get to the investment part, you're supposed to be investing and focusing on just paying off your mortgage. So that way, if you have no mortgage, it really puts you in a very good position. And in the course, I teach you how to pay off a mortgage in less than 10 years, which is basically awesome. So overall, guys, the best advice I have for you guys is this, okay? You need to have a plan that is so good that things don't need to go according to plan in order for you to have success. Think about it, okay? If you are investing this way, you have no debt. You have an emergency fund, like fully funded. You're only investing 10, 20%, and you're also trying to pay off a mortgage. If you lose your job, you have 6 months to figure it out, right? You don't have anything holding you back as far as debt. You're still investing your money. And once the house is paid off, if you do lose your job and you can't find that high paying job anymore, you don't need that much money because your cost of living has substantially gone down and your investments are going to help you cover the difference in income anyway. So the better your plan is, the less effective it actually needs to be. And that sounds crazy, but trust me, it does make sense. And guys, that's basically it. Overall, keep investing if you're supposed to be, and stop investing and pause if you're not supposed to be. That's the answer. And things like this would always happen. They will always repeat, and it's just how the world basically works. And I tend not to focus a lot on it because if you focus on things you can't control, it's a sure guaranteed way to become anxious and have anxiety and all that extra stuff. So I kind of just focus on the things I can control, and that's what I basically do. Thanks for watching. Like, subscribe, hit the bell to get notified. If you want to DM me on Instagram, TommyBryson. If you want to call me, the link is down below for free calls. On top of that, here is another video, and here's my face. Click subscribe. And as always, long-term team officially out.